All right. Good afternoon, evening, morning, wherever you may be out there in the world. It's great to be with you. Ray Kimbrell right here. I'll be introducing Scott Durfey here in just a second. And we're bringing you day 3 of our technical analysis virtual workshop, which is price patterns and bounces and breaks. Now, a couple of things to say as we get going. Sir, first, I want to say thanks for everybody's patience yesterday. We had some really bad weather screaming through the Texas area and our producers, and we lose internet sometimes, uh, and we have some issues that pop up. So it's not the Thinkorswim platform. It's not anything Scott or me or the boosters could do about it. But hey, we're looking for a good day today, and hopefully everything works out okay. So with that, just know that there's again thousands of people attending, which we thank you very much for doing that. We'll do the best we can to hit things in the chat, but it flies by pretty quick. We missed a lot of it. We got Brett Crowther helping us out. He's a great man, great instructor himself, and he's going to be helping out in the chats with us during the workshop, and we'll be dropping links in there that are very handy for you as we get going. All right, but first off, let's do this. Let's go to the disclosures, which we need to cover on every event that we do. Just know that Scott and I will be covering and looking at a lot of actual stocks, as we teach, and it's for educational purposes only. Just because we're outlining a stock trade or looking at a specific company doesn't mean we endorse that company or it's advice or it's a hint, hint, wink, wink. None of that. It's strictly for educational purposes. Also know that you do have a paper money account that you're able to use. A lot of people are asking, how do I get into that? Well, before you log into Thinkorswim, at the bottom it says paper money. Just click that, use your credentials to log in, and you're in. But anyway, it's a great way to practice. Just know that successful paper trading does not necessarily suggest you'll have the same success with real money, as the markets are always changing. All right, and we won't get into options in this class. We may mention it a few times here and there, but just know that we do talk about options, that the options do obtain risk, just like stock trading, and options trading is not for all investors. All right, there's the disclosures, and let's keep rolling around here, and let's get into the next section here. And I want to bring up my great friend, Scott Durfey. He's been doing this for many years. And he's a regular contributor to the Schwab Network, which is brought to us by our Charles Schwab Media Production Company, separate but affiliated company. And the best part about this, though, is he could teach all this Thinkorswim, technical analysis, stocks, options. All right. And he's a great guy. I can vouch for him. And with that, say hi, Scott Durfee.
Hello, Ray Kimbrell. Thanks so much for all those kind words. I'll send you your $5 later. I
It's
know,
up to 10 now. It's 10 now.
I know, as well. Hey, everybody! It's so good to be with you again tonight. It's my pleasure. Ray's going to be the first to kind of instruct us this evening, so I'm going to go ahead and introduce Ray right now. Then we're going to let him just roll with it till about halfway through, and then I'll take over and we'll be talking about bounces and breaks. But before I do that, I do want to introduce my good friend, Mr. Ray Kimbrell here. As you can see, he's been a coach since 2004. He's also a regular contributor on the Schwab Network. He specializes in teaching the Thinkorswim platform, technical analysis class, the options class, and really just about everything else that we have to offer. Nobody better qualified to do what we're doing here tonight. Ladies and gentlemen, I give you my good friend, Mr. Ray Kimbrough. Take it away, Ray.
All right. Thank you, Scott Durfee. I do appreciate you. And don't go too far because we'll be joining in here and a lot of things together here as we get through the day and get into our pricing patterns. So with that, let's talk about it right here. Here we go. Price patterns, bounces and breaks. I'm going to do price patterns along with my friend Scott, and then he's going to jump in, do bounces and breaks, and finish out the rest of the day for us. Okay. But what I want to do before we get into the goals and what's happening, I do want to go up here and I want to show you a couple of things. First off, we got a lot of questions when it comes to how do I watch the previously recorded versions. So Monday and Tuesday, you see them right there. Okay. There's Monday's class. There's Tuesday's class. The nice thing about the producers and the team behind the scenes is they edited the yesterday to take out that section where we had the internet going down and everything else. So it's nice and clean. So there you go. You got it right there. You can see where it says watch now, watch now. Obviously, you can't watch this one because we're in it right now. And but to get to this page, Brett will probably drop a link in there. I'm going to drop the link in as well. And Scott can probably do it too. But I'm going to put that in the chat right now. Okay. And there's the link to get right into the how to get to these recordings. Okay. And so you won't see tomorrow's recording until or today's recording until tomorrow. They go through it in the morning, make sure everything's ready to go for you guys, and you're ready to roll. But there's the link right there. Do take advantage of it. The other thing that is going on now, typically, Scott and I would do a Q&A session on Friday about the 4 days we just taught, and you would submit questions and those kind of things. But we're not doing that this week because Friday is going to be a great day. It's called National Investing Day. Okay. And I'm going to open up that right there. And here's National Investing Day. And we're also going to drop a link that lets you get into this page really easy. Okay. And here it comes right now. I'm going to drop it. And so the team will be dropping it as well. But there it is right there. Okay. National Investing Day. And I'm not going to go into the full agenda and spend our time there. Y'all can do that just as easy as I can. But just hit that and you're ready to go. Hit the little burnt orange. There you go. If you're Texas fans, burnt orange button. And you can register for that full day of learning. It's going to be a great day. Highly encourage it. There's many things that, some things we can't do. We can't recommend a lot of stuff, but this we can recommend. All right. We recommend going to the class. All right. And there you go. That's how that works out. Take full advantage of that. We'll repeat that again later on in the session, but I just want to get that out there out front so that you can get ready to rock and roll. The other thing I want to do before we get going, let's do this real quick. Scott did a great job yesterday of talking about the candles and how things work and how to get them on your platform. So let's look at this right now. I'm on Thinkorswim, and you can see that I have red and green candles set up on my chart. And some of you were asking a lot of quick questions again, like how do you get those candles on there? How do you make the colors? How come sometimes they're empty, they're not empty? How can I do that? All those kind of neat things. Let's talk about it real quick. First off, all right, on the candle, like this one right here, okay, on 226. All right, that candle is red, which signifies that it's really been for the day, that stock opened higher and closed lower. Okay, that's it. It opened higher, closed lower, but it happens to have closed higher than the previous day. So you can get, in this case, the way this is set up, a solid candle, and it's red, but it's still higher than the previous day's close. All right. So the filled in candle just means that for that day, it opened higher, closed lower. That's all it means. Open higher, close lower. But it can also doesn't mean it's a down day overall. Okay, as in compared to the last day. Now, so for example, watch this. Here is notice it's a red filled in candle on 226. If I was to go to the gear, and this is how you set candles up at the same time, and you go to appearance, here's where you can set all your candles, but how you want them to look. You can see where they got filled up, filled down, so you can actually not have them filled up if you don't want. You can uncheck it and you can see they're empty now. All right, you can check it and they fill. It's up to you how you want your candles to look. You can change the colors of your candles. You don't have to use red and green. Okay. All right. If I know Scott, sometimes he's a big fan of the Y. All right, which is who, Scott? Come on.
BYU, blue and white.
BYU, there you go. All right. And so sometimes he'll make them blue and white, because he's supporting that team for a while. But you can do anything you like with those colors. Okay. But here you can do this too. So this is a standard candle setup. Candle trend, for example. Now, if you look at this, they have filled candles, open candles, all kinds of different colors. If I apply this, all right, hit OK. Now look, here is 226, that same candle. Remember, it was red earlier. All right. And the reason it was red, because it just looks at open close. Now, what it looks at, it still looks at open close. It's filled in because it closed for the day. Okay. It opened higher, closed lower. But the reason it's green is because it closed higher than the previous day's close. All right. Does that make sense? So this is called candle trend setup. Okay. This is called candle trend setup. But I'm going to go back to the standard because a lot of folks, this kind of confuses sometimes people. So I'm going to use the standard setup that we've been teaching off of. But I want to show you how to find the candles first, where they are. Okay. Again, go to the gear, go to appearance, and then go up here and you can select. By the way, if you want the bars on there, like Scott was explaining the bars, that's how the traditional ones look. Opens on the left, close on the right. All right. And then we go back to candle. There's Heikin-Ashi. We'll use those in a minute too. Okay. Here's candles. Hit up. Remember to hit apply and then okay. And you're back to normal. All right, Scott, was that all we wanted to hit? I think in the beginning of those.
Yeah,
Like,
Ray, you got it. You got it, Ray.
all right. And the other thing, folks, on this was the patterns. The big thing on the patterns was this. Is a key thing. We said it repeatedly, and that's this. When you're looking at the patterns and you're looking at like this shooting star or a hammer, okay, or dojis or morning stars or evening stars or hanging men, or the reason depends on where they're located, depends on what they are, okay. You need to be looking at where they are in relation to support and resistance. Very, very key. Very, very key. And we're going to keep using this as we go through the day today. We want to do a small, quick review before we get into the meat of the matter of today's class, okay, which is going to be on our patterns, all right? And so in this case, we're going to look to analyze the potential price move of the stock with the targeting forecast. That's right. Now, I do have a crystal ball. All right. I actually have a crystal ball. Look at that. It's pretty cool. All right. But here's the thing. I can talk to it all day long and I ask it, what's the market going to be tomorrow? It doesn't tell me squat, man. All right. And so, we don't really have, any kind of tools that can give you that forecast out. What's going to be tomorrow's class. All right. But hey, we're going to give you some ideas of how the price, because price is king, and how that price pattern can help us lead into the things that potentially the stock could move to. We don't know. There's no guarantee it can go there. But that's where we're going to get into this. What I mean by targeting forecasting. So one of the ways you can make a trade, by the way, out there, is called an OCO order. All right, one cancels the other, and maybe we'll do some practice ones with that. I know tomorrow, Scott and myself are going to get into some flag patterns and doing a little more of the trading side of it, and how to put those orders in place, and more importantly, the risk management. How can you look at where your current size of your portfolio is, and should you buy 100 shares? Is it safe to buy 200 shares? Is it 1,000 shares? Is it 10 shares? Based on where that portfolio is, so you don't put yourself at so much risk that if it does go against you because your crystal ball didn't work, you don't blow your account up. All right. So that's what we're going to be looking at with regard to tomorrow, risk management, some of these trades. We'll do a few today though, just to keep you on your toes. All right. And then learn how to identify the potential entry and exits. All right. And entry and exit conditions based on bounces and breakouts. Now, I know we asked this a lot in the live class. Matter of fact, I asked this a lot in live class on some of the portions that I do, and I know Scott does too. And that's this. Most of you have been probably trading for a while, all right? And you own shares of stock. Okay, that's why you're in this class. You want to get a little better at it, but you own shares of stock. So most people, it was pretty easy to get into a trade. All right, you got in, you wanted to buy it, you bought it, you're in. Now, it might not have been going north like you wanted to be, but now you've been to this class, I need to be going on the northbound side if it's going in, right? If you use our analogy. But here's the hard one, getting out. All right, getting out of the trade. And a lot of you are probably shaking your head going, yeah, that's it's kind of the hard part, a minute, but some people are in for the long haul, that's fine. But, what are some tools to get out of that trade? And so, this could be very, very helpful to you today when Scott gets into the bounces and breaks, because if you're bullish, all right, and you're seeing, when you want to get out of that trade, if it's turning bearish, how can you depict that? And Scott's going to do a great job of helping us with that coming up. So just want to know that's what the plan of the day is today. We're going to get into those opportunities, and we're going to look at them with these things right here. All right. And this first one is called bullish pricing patterns. Now, Scott was easy on you guys yesterday. All right. And that he said, you really didn't have to memorize, hey, is this a hammer, or is this a shooting star, or is this an evening star or morning? What are the actual names Um, and he was very correct in saying that not that important, but what is important is you understand what they mean. What is the story telling you, right? What's happening? All right. Well, I'm not as nice. Okay. I'm going to say, hey, you're in a class. There's 8 of them up there. All right. There's 8 of them. Memorize them. All right. And I think Scott, you're going to show him how to find the reference guide, right? When you get in there.
Yeah, absolutely.
All right. So in the reference guide, you have these pages. Okay. So you have all this. So I want you to know how to identify these on a live chart, and we're going to do that. Matter of fact, here's bullish ones and there's bearish ones. Look, they look very similar, don't they? Okay. Just the matters is the direction and where they point to. Okay. So let's look at these real quick and let's get into some ideas of what we're going to look for on a real chart. Because how many of you're looking at this chart right now and you're going, well, when I pull my charts up, they don't look this clean, right? They're all over the place. So we want to go and say, okay, well, how do we how can we recognize these on live charts? And we're going to do that here. But I want to go a couple of things. And first off is this. Now I'm going to draw some lines on these charts, and hopefully you'll be able to see these lines okay. And look at this right here. So right now, when it comes to a reversal, all right, that's what we're doing right now, reversal pattern. These are bullish price patterns, all right? So why are we talking about reversals already? Well, the reason why is this reversal. All right, what this is saying is, what is the trend coming into the pattern? And you can see the trend right here is down, okay? As a matter of fact, the trend on all of these, all right, coming into the top 3, where it says a reversal, is down. All right. All 3, they're all coming down. The trend coming into the pattern is down. And the reason why it's called a reversal, because what is the trend when we're coming out? What is the trend when we're coming out of these patterns? The trend now is going which way? It's going north. And if we're bullish and if we're buying, we want to be in that northbound bus, correct? And up it's going. All right. So that's why we call this a reversal pattern. So when it comes down, now if you can't see this bottom line, all right, it's a green line in the bottom, acting as our support level. And we got a red line across the top, acting as our resistance level. So it's coming down, it's hitting a level of support, bounces up, hitting resistance, comes back down, that's the level of support, that area. Remember, Scott talked to us about this. All right. Support and resistance are areas that not an exact price point. All right. And then it comes up here. And then Scott is going to talk about this. All right. A key thing that happens on this price pattern is it broke through resistance, right? All right. It broke through resistance. Now, triple bottom, very much like the double bottom. Same thing. It's coming down. All right. Hits, back to resistance, hits support, back to resistance, hits support. And then it does the same thing. Key area. It's breaking out of that resistance area. Okay. Now, this one is head and shoulders. All right. Head and shoulders, and it's called bottom. All right. And the reason it's called bottom is the head is down here on the bottom. Okay. And we get to the next page for the bearish patterns, you'll see it's the other way around. So this one, again, trends coming down. All right. But instead of coming all the way down to the support level, can you notice that the turn or the bounce occurred a little higher, all right, not on support. Then it came down, hit resistance, came down to support level, the head, all right, back up to resistance, came back down, but didn't go all the way back down to support, stopped short, turned early, and again, key thing, broke out of that level of resistance, okay, broke out of that level of resistance. So we'll find some of these out there live now. I'll tell you right now, I'm not gonna, because we don't have time for one thing, but I'm not gonna go through and hit every stock I could find that has a flag, a pennant, a wedge, a rectangle, a ascending triangle, a bottom, a double bottom, triple bottom. We're gonna find a few of them out here, but this is your homework. All right, that's why you have this page to go identify some of these and do some homework and put that to the test, so to speak. Now, these are reversal patterns. Why reversal? Trend coming into the pattern down, down, down. The continuation patterns, bullish continuation patterns, are just that. The trend coming into the pattern is up. All right. The trend coming into the pattern is up. All right. Can y'all see? Hopefully you haven't seen here much. Can y'all see the yellow line okay on this? Let me know if you can. All right. Trend again up. It's going good. Okay. Coming up good. And coming up good. Now, that's why it's called continuation, because what's going on now is the stock, the price, I should say, it's coming up to an area, it's hitting resistance, checking out support, resistance, support, resistance, support, and then it breaks out. Now, we're going to get more in depth on flag patterns tomorrow when it comes to the timing of this and the length of these flag patterns and those kind of things, and if the flag patterns should go down so far. But just know right now, it looks like a flag, right? Kind of like not a strong wind flag, but kind of just hanging down. All right. But then again, here's a key thing, this breakout of that resistance level. Pennant. All right. So a pennant. Matter of fact, baseball games going on right now. New York Yankees and Texas Rangers, Scott Durfey. Now, unfortunately, the Rangers have lost the first two against the Yankees, but right now we're winning. Oh,
kind of wondered
I
why.
changed that. We just won. Thank you very much. All right. So sometimes you go to baseball games and you see those pennants, right? So I'm dating myself. You don't probably see them as much anymore, but a pennant looks like a baseball pennant, right? So you got your resistance level coming down, support level going up. It's coming to a pinch point, and the breakout continues to the upside. Okay, continues to the upside. Continuation pattern. Wedge resistance coming down a little bit. The support is actually angling down a bit, but not as much. Kind of like a wedge you'd use to, break apart a piece of wood or something like that. But again, it's that where does the trend continue when it comes out of the pattern? In this case, still going up. Now, could you have a flag, a pennant, a wedge, a rectangle, and then instead of going up, it breaks to the downside? Of course you could. We don't know the future. We don't know what goes on all the time. Matter of fact, you see failed flags and pennants and wedges, not all the time, but you see them. All right, it happens. All right, so you might want to see that confirmation before it comes out of there to act on them. Some traders, they don't see that. Some traders say it's the trend is our friend. It's in that uptrend. I'm looking to say to place my trade when it's at this pinch point and going up, maybe capturing it a little bit lower. It's up to you as an individual trader how you want to tackle this kind of a trade. All right, so we'll look at some examples of this here in a few minutes. All right, rectangle. Look at this one, and look at that one right there. Do they look very similar? The difference is the trend coming into the trade. All right, and then this one, ascending triangle. All right, it's been hitting up, it's been going along, and it's hitting that resistance level pretty hard. All right, just coming up, it can't break through. But every time it comes back down, it's getting closer to that resistance. It's trading higher, closing higher, closing higher. And eventually, again, that magical breakthrough to the upside and continuing with its pattern. Now, there's one thing I want to cover, though, before we move on to the next section. And these patterns can do a couple of other things that are very helpful. So this distance right here, all right, between support and resistance can be very useful when we say about targeting, okay? When we talk about a targeting where if this breaks out, all right, will it break out and maybe the same height between support and resistance when it breaks out, all right? The market likes symmetrical things, okay? And so in that case, you'll see this phenomenon occur a lot of times when it breaks out this high, when it breaks out here, that same distance is here. So you can use that sometimes as a target when it comes to maybe getting out of the trade when you made a certain profit, if you want to do that. It's up to you, okay, as an individual trader. But we'll show some examples of how that works when it goes forward. Now, I said we won't talk options a lot. We're doing an option. By the way, we are doing an options virtual workshop, and that's coming up in June 8th. Starts June 8th. I'm not sure if you're able to sign up for it yet. If you go to the same spot you signed up for this, it'll be there, okay? And you can sign up for it. I think Scott may talk about more of that later. But when you go through there, and when it comes to an options trade, they're time based. So a lot of times you want to kind of gauge your trade as an options trader on, well, is that stock potentially going to move in a certain direction long enough or high enough in a certain time frame? Because the other thing that these patterns can help you identify is this. If it took this long for this pattern to form, it may take that same amount of time, because that symmetrical idea we talked about, for it to get to that level too. So let's say this is 2 months of time that had passed, you know, potentially it could take 2 months of time for it to get to this level up here as it starts trading and continues in that upward pattern. Okay. So that's how you can use the pattern itself to help you gauge potential moves, potential target times as you're trading, whether it's an option trade, a stock trade, doesn't matter, but you can gauge and use it for that. Now, so this case, same thing for the head and shoulders, that distance there, okay? For the triple bottom, that distance there. But for a flag, it's going to be the flagpole is what you're going to be measuring. Now, some traders will start the flagpole at the bottom of the flag when it breaks out. Some traders will place it to the top of the flag when it breaks out. Again, that's up to you as an individual trader. All right, pennant, same type thing, can be the flag. I know some traders, they actually look at the distance of the triangle as their measurement for potential targets as it breaks out. Okay, same thing for the wedge, the rectangle again, the distance here, the ascending triangle, because the support is ascending upward. Same thing right there is the distance of the wide edge of that triangle. Okay, so that's how you can use your price patterns, all right, as you go in. Now, do you think all the time that your double bottom is going to be always this clean? It's always going to have the distance between two nice horizontal lines? Or could it actually look like this sometimes? Could it be angled up like that as it goes through? And this is your double bottom. Could it be at a diagonal angle? What do you guys think? Answer is yes, it is. It can be that way. Okay. Does the head and shoulders, does both shoulders have to be, pretty much on the same line? No, they do not. Can there be a little blip in the middle between? Yes, they can. It's the general shape that you're looking for. Okay. You don't have to be, don't get wrapped around the axle, so to speak, about, oh, it's not exactly like they're drawing. Okay. Again, just like support and resistance, it's not exact price points as it goes around. Okay, so let's do this. Let me go to the next page. Oh, wrong way. And let's look at these bearish patterns. Now, if you notice, there isn't much difference between the patterns that we did here. The big thing here is a bearish reversal. Remember, we're looking at turning bearish. All right. And why would we want to know about bearish signals? All right. Why do we want to know about bearish signals? Well, if you're bullish in a trade and all of a sudden you start seeing bearish signals appearing, could this be how to identify potentially how to get out of your trade? Remember, one of the hardest things is not really getting in, is getting out. Okay. And so this may be what's helping you, and vice versa. If you're in a bearish trade and you see bullish patterns forming, maybe it's time to get out of your bearish trades, whether it's you're shorting stock, whether you've got puts going, you got calls going, depending on what it might be. Okay. So, and you'll hear us talk about some of this when we get into our options class in June as well, about timing issues. Okay. So here again, what do we have? So bearish reversal is called a bearish reversal on these three up here, because what is the trend going into the trade? The trend is up going into the trade, but the trend is down coming out of the trade. Okay. Trend is out coming down out of the trade. So it's what? A bearish reversal from the uptrend to the downtrend. And then continuation patterns, just like we said before, no different. The trend going into the trades are down, okay? And the trend coming out of these patterns is down. In other words, continuing on, It's continuing on. Okay. So I think enough of our slides, and let's go live out there to the oh, this is the thing I thought, and this goes back to our targeting. We talked about that. Our entry point, our height can be our target price for our exits. All right. And then, so let's go live to the site and let's start hitting some of these. All right. Now then, as we go into this, okay, it's kind of like, as a matter of fact, I'm going to give um, uh, Mr. May, all right, who is one of our wonderful coaches out there, all right, big guy, matter of fact, he's like 6'7", guy's huge, all right, and he talked about this a long time ago, and I kind of stole it from him. I like his idea. It's like a character being a tug of war, right? You got two big teams out there, all right, on the end of these ropes. There's a little flag in the middle, right? And they're going back and forth. They're going back and forth, tugging back and forth until eventually someone's going to win, all right? All right. And so when that happens, you get all these signals that can come up when it comes to our patterns. And that's kind of what's happening when they're coming down, they're hitting between support and resistance, and then they break out one direction or the other. Okay. So when it comes to the patterns, you're always going to have your entry signals, your target, your stop, and your time frame, just as we outlined on those slides. So what I want to show you is some examples of some of these slides. And let's look at first, let's look at this stock right up here. All right. And I'm going to change this to a 1-year view. Okay. And I'm going to go in here. I'm going to look at TJX. All right. TJX. Now, some of these I'm going to look further back in time, and some of these I'm going to look up close in time, but I want to give you an idea of what we're seeing. So if I was to go in here, okay, and I go back here to this back time frame, can you see right here what is the trend right through here, folks? What is the trend right through here? Let me get my trend level. All right, what's the trend right through here? Which way is it going? It's going down, yes? Okay. And then we have this level right down through here of what? Support. And we have this level right up through here, okay, of resistance. Can you see this little pattern that formed just as we talked about earlier on the slideshow? All right, it's coming down, bounces up, hits resistance, comes down to support, bounces up, hits resistance. Oh, by the way, Scott Durfey talked about these hammers right here on support levels. Okay, and then it comes back up, and then we have a lot of small little candles, and then we got some big candles up here as it comes up through resistance. Okay, all right, so momentum, big momentum candles coming up through resistance. So is this a pretty much textbook looking what? And put our direction of our trend up through there, double bottom. All right. So is this a bullish reversal pattern? Is bullish reversal pattern because what? We're bearish coming into it. Double bottom, breaks out to the upside. Now look at this. Let's do this. Let's draw this line we talked about here. Okay. And then we're going to right click on it. And then we're going to duplicate the drawing. And then when it breaks out, oh, sorry. It breaks out and we come up here and we get, did it come back up and hit that level we just talked about? Now it didn't take, it took from basically about 626, all right, to 720, almost a month to get there. And it took from here 8-1 to 8, only took 15 days to get there. All right. But it did take some time to get there. Yes. So you can see how you can use some of this direction here to help you get through and identify some of these issues. Okay. So now then, let's look at Amazon. Okay. Here's Amazon. Okay. What's going on right here? What's going on right here? Downtrend. Let's draw in some support and resistance levels. All right. Can you see the double bottom formed right through here? Instead of going day by day, can you see the double bottom forming right through here? Yes. All right. So if we draw our line for our double bottom, okay, duplicate that line. Let's move it up to here. And look at this. Here's a nice thing. Look at this. Look at this level right here where we have a level of what? Old resistance. And did it break through? And then now that's becoming new support. And it's very similar to that same gap right there. Okay. I hope this is helping you guys. You're seeing some things coming through. Okay. How about, let's speed it up a little bit. I want to make sure I get through different sections. Look at this one. This is called Caterpillar. And on this one, do we have what's right here? Let's draw in our support and resistance lines. All right. And we have a triple bottom coming through here. Down, down, down. And then finally, this broke through it, but it gapped up through it. Is that okay? Can you gap up through, and does that count as breaking through a level of resistance? Okay. And then once it did that, it's forming this. What does this right here look like to you guys? All right. We have a pole, and then we have, I can get it to draw. There we go. We have a flag. Okay. Does that look like us we see kind of in our textbook we had earlier on our slideshow? All right. So you have a triple bottom breaking out and then testing and then forming a flag. So in this case, if we were to duplicate the pole, put it to the bottom of our flag or the lower candle in the flag, okay, could this be a level that we could target that we might see Caterpillar moving to? Okay. And then again, another bullish signal, correct. A lot of folks are following along, looking pretty close on this. I'm liking that. All right, as long as we're following, I'm very happy. Okay. All right, let's look at this. Again, just because we're outlining different stock doesn't mean that that this is something you should be trading. It's just to teach you the patterns. All right, what would you call this right here, folks? All right, what would you call this? Is that an explosive move to the upside? Do we have a flag forming right through here? All right. Another bull flag forming up right there. Okay. So again, another way to identify they're out there. Even on, down days in the market, think, oh man, we can't find anything. It's a down day in the market. Not going to find any bullish signals. I don't know. I think we're finding some right here, potential signals. Okay. How about, let's look at this one. All right. CSCO. All right, Costco. Now then, here's a kind of a unique situation going on. So here's Costco. We have a flagpole. We have a flag coming in right through here. All right. And we have a flag coming in right through here. And this is a very unique phenomenon. I'll let Scott Durfey follow this one if he wants to use that one later. Scott, that's Costco. If this is one you want to add to your list of examples to give the folks. But this little phenomenon right here where it closed in a certain area, that's kind of unique. Okay. So in this case, if we want to do the same type thing, here's another thing you can do. All right. Everybody's heard of Fibonacci retracements. The other thing you can do is change your drawing to Fibonacci's, and you draw from the top down to get your targets to the upside. If I was to draw from the top down of my flagpole, all right, anchor it, okay, this can be my target potentially for this flag if it breaks out. As a matter of fact, let's do this. Let's go in and duplicate this trend line. All right, and then let's put it up there in the bottom. Look at that, folks. Oh my goodness. How's that? How's that for the flagpole and the Fibonacci lining up? Okay. So that might be something to keep watching also as you start doing some of these examples as it goes along. A couple more. I'm going to give it to you, Scotty. All right. Let's go META. Hopefully this is helping you guys instead of looking at slides all day long. And we're talking about wonderful examples of going in. All right, here's one. Here's our poll. Whoops, sorry. I got to change that back to my trend line. Here's a poll. Okay. Kind of breakout right there. And then you have this, though. You got this thing happening. What does this look like? Oh, that's more of a pennant as opposed to a flag. Okay. So can we do the same type thing here again with this? Let's duplicate. All right, let's look at our distance instead of the flagpole. be a little more conservative. Let's look at our distance of the end of the triangle. We'll duplicate that one. Let's move that one over to if it should break out above our resistance level. And let's just test that with Fibonacci to see how that works. All right. We'll come down here. There we go. What do you think, folks? I think it's just happenstance. I don't know. All right. Could be something to use as you move forward and looking at your different types of trading. All right. Let's look at a bearish side. Because some people think, well, is it always just going to be bullish things? Can you use these to the bear side of the equation? And the answer is yes. Let's look at T. All right, look at T. And this will be my last one, Scott, and then it's all yours, my friend. Okay. All right, so look at T. All right, could you do the same thing here? Is this a flagpole? Come down through here. We'll use it at the gap. Okay. But then, a flag, we said it was like, equal, but these are kind of doing this, are they not? Kind of more of a pennant. So could the pennant go to the downside as well? So if this should continue to its downward motion, could we duplicate the pole or maybe duplicate the distance of the triangle? All right. And right click, duplicate, and move it down. Okay. And then if we're using Fibonacci's here, instead of dropping from the top down, we would from the bottom up. Okay. Because we're doing the extensions here. We do our Fibonacci retracements. We pull it there. All right. And we come down. All right. And this could be our next level. All right. So that's price patterns. Okay. That's price patterns. Now, hopefully that made a little bit of sense to everybody. And you're thinking, oh my gosh, am I going to be able to get home and do this? And the answer is, yeah, you'll be able to get home and do this. Okay. Because you're going to have to do some work on it. Okay. Now, I did a couple of things. Did Fibonacci's. We did there's training. There's these wonderful sites on the coaching site. Okay, they're called webcasts, and we have some wonderful coaches that teach a lot of different information. You can go to a webcast and just go in there and type in Fibonacci's. All right, and they'll be able to explain to you in that class how Fibonacci's works. Yes, it was Fibonacci retracements. Okay, Fibonacci retracements. Okay. And then to find those, let's go back real quick. To find Fibonacci retracements on your platform, you go to drawings, drawing tools, and it's the percentage right there. That's Fibonacci retracements. Okay. Now, I was showing you quickly now, when it comes to navigating the platform, some of you may be still new to this. Hit this right here. This is a great way to get one-on-one. Again, a walkthrough, get it scheduled on your time. There's thousands of you in this class, honestly. So make sure if you give it time, keep trying, you'll get through. But that is your Thinkorswim walkthrough, and it's a great way to practice. Whoops, sorry. A great way to get settled into your what's happening next with the platform itself. Again, classes coming up in Chicago, San Diego. Go to schwab.com/coaching, and you'll be able to see all these classes. All right. Scott Durfey.
Awesome job, Ray Kimbrell.
That was a quick 45 minutes, man.
It always goes just like that, doesn't it?
Man, yeah. I'm in a minute over. Sorry about that.
Oh, no, you're good, man. So you just got done mentioning, stay with me for just a second. You just got done mentioning the importance and the power behind that one-on-one for the Thinkorswim platform demo. Again, gang, I'm just going to reiterate that. Super important for those who may be struggling. And let's just face it, at some point, most of us struggle a little bit with some of the things with the Thinkorswim platform. So take advantage of that. It's there for you. And in addition to that, don't forget to, if you haven't already done so, get signed up. If you're in the area of Chicago or San Diego or back in Chicago in July, there you have those events there. Please take advantage of the free education. Many of you I know go. For those of you who haven't been to those, maybe those who have been to those could just kind of let them know how awesome they are. Drop that in the chat. I mean, they just are. So sometimes even worth traveling to. Anyway, that's great. Thanks so much, Ray. Again, we're going to move now into yet another section here. You know, we've been talking about this, and this is an important concept to understand. You know, some moments to enter or exit trades can be better than others. There's just a timing component that's just implied explicitly, actually, in when we start talking about technical analysis. So when we talk about timing and times that are better to enter or exit, we really see these not just in the patterns like Ray's just been talking to us about, and not just in the candlesticks that we were talking about yesterday, and not just in support and resistance that we talked about on Monday, and trend as well. But they really start showing up when we see these bounces and breaks. Now, obviously, these bounces and breaks are around levels of support and resistance, and that's what Ray has done such a great job helping us to understand so far. Now, we're going to take it just a step further, and we're going to maybe even expand on some of the same examples that Ray showed us. I may even bring Ray in here to kind of add a second commentary, color commentary, if you will, around it, because I think sometimes there's a benefit to potentially seeing things maybe from two different vantage or viewpoints as well. So take advantage of that as well. Now, gang, one other thing I will tell you, and I'm going to have Brett drop a couple of links into the chat right now. One thing I'm going to tell you is we're going to be covering a lot of material, and I will be honest with you. When I began this stuff kind of overwhelmed me. 20 something years ago when I started learning about technical analysis, some of the things that we talked about seemed overwhelming. But they don't have to be overwhelming. We especially now, back then it was a little bit different, but especially now we have so many resources for you. And Brett's just put a couple of those into the chat. I would encourage you to go ahead and click on those now. You don't watch them now, but click on those now, or copy and paste them to a document and save those. This would be a great review. I think both of these are our great friend Ben Watson. Most of you probably know him. Does a great job in teaching this and other things. And the things that we'll be talking about tonight, he will be taking to a new level in both of those videos. One will be talking about the hold, which you see here now. That's a little bit of a shorter video. And then one has to do with more about bounces and breaks in general. But let's talk about bounces, shall we? Bounces. They occur when the price meets a level of support or resistance. And this is important for us to remember. We'll go back to night number one. If you'll remember our price action ball, it will bounce off of the ceiling and the floor. So this is also the case with the stock. When we have a bounce off of support, or we could have a bounce off of resistance. And when we have a bounce off of support with the right kind of signals, etc., that can be a bullish entry or a bearish exit. I'm glad that Ray brought up a few minutes ago that these don't all have to be just bearish, just bullish signals. These can also help us in our protection. This can also help us in bearish situations, etc. So I'm glad that Ray brought that up. Now, one of the tools that we're going to use, a little skill set, a little method, you'll notice that right here, I have, there's this word called hold. Hold. Now that's an acronym, okay? And that acronym is describing what has potentially been happening. Ray mentioned reversal patterns and continuation patterns. This particular one potentially is a reversal pattern. So what you're seeing here, as you can see, is we have a trend, or the stock is moving into this level of support. Once it hits that level of support, we get a little bit of stall here. And now this is textbook. When we get into the wild, we may have some that look textbook, but we'll learn to interpret and decipher these things as well. But now we have another candle, a new candle that opened and then it closed above the high of the low day in that trend. So let me just point that out. Let me clear out the drawing set. You can see as we are coming down here, that's the low day. That's the low part of that trend. That day's lower than this day, but it wouldn't have mattered because the idea is this. We have a stock that opened and then it closed above the high of the low day in that trend, which is obviously around this level of support. That's called a hold. That hold can be an entry signal. for the bulls. Okay, so a bullish entry signal. It can also be a bearish signal to maybe make an adjustment on your bearish trade if you're in a bearish trade, etc. Okay, so just like everything else that we've been talking about today, Ray talked about, and not just today, but every day. Ray talked about a reversal pattern. He also talked about a continuation pattern. He showed those to you in bullish modes and bearish modes. Well, this is the same true with the Cahold. If there's a Cahold, we have also what we call a Cablode, a close below the low of the high day. Again, a signal, a bearish signal. And so a bearish signal could be a bearish entry, or it could be a bullish exit, etc. These are the kinds of things that the technical analysis, especially again when we get to pinpointing it down around these levels of support and resistance with these patterns and price actions, these are the kinds of things that can really help develop confidence as we approach the market as investors and traders, specifically traders in this case. Let me just clear all that, and I'm going to go ahead and go out of here. So, gang, let's do this. Let's just kind of identify what we're talking about when we're talking about bounces and breaks. This is going to be very easy, and then we're going to go into the wild or out into the market and look at some charts, and we will start looking at bounces and breaks, maybe even finding a few Caholds, maybe a few things like that, and we'll have a lot more commentary around that. Okay, let's do it now. All right, so moving on, gang. Now, before we do this, I just wanted one more time reiterate that you can download the reference guide. I know Brett's been dropping that in there. The reference guide is very valuable. It's every slide that Ray and I are using and more. And so there are a few more slides around these concepts, especially the ones that I'm talking about now, that can be very helpful. And I would encourage you to download the reference guide. Ray, I know that you've seen it, but probably seeing it less lately than we used to see it. But we used to see it all the time when people would print the reference guide and bring it to class when we were in our live classes. Dozens of pages thick, but it's well worth it. A great thing to have on hand. So what we're going to do is we're going to come right here to schwab.com coaching. Once we've done that, I'm going to click on the live and virtual workshops. Once I've done that, I'm going to go ahead and uncheck webcast just to clean up the calendar for myself. When I've done that, I can go ahead and I can click on any of these days. That's the technical analysis virtual workshop. I'll just do that there. You'll notice right here it says technical analysis reference guide. Go ahead and click on that, and there's your reference guide. Again, every slide that Ray and I have been using, and even more. So very helpful. You have all 4 nights, all 4 sessions in this reference guide here. Okay. Okay, let's get out to the wild here and let's start taking a look at potentially at some of these bounces and breaks that we've been talking about, giving you a little preview there to one that maybe we'll come back to. I'm going to start the night with this one. And again, gang, bounces and breaks on page 40 of the reference guide is where we're going to begin this type of discussion. So keep that in mind, okay? All right, so let's start here with a stock very few of you have probably heard of, a little company called Apple. I'm going to, you know what, I've got the 1-year chart on. I think the 1-year chart may be difficult to see sometimes. You can go ahead and change that. Let's go to a 6-month 1-day chart. That's probably a little easier for you to see, definitely easier for my old eyes to see as well. But what do we have going on here? Let's just take a quick look. So we have Apple, which has been bouncing off of, and you can see that down here, which has been bouncing off a pretty good area of support. And as it's been bouncing off of this area of support, now it has began to gain some momentum to the upside. And you can see this with some of these big green arrows. There's some candlestick patterns happening, or shapely candles happening around there that don't have much relevance because, again, they're not at certain levels of support and resistance. We do, however, have a level potentially of resistance there. You can see that. how it came up and then how it found resistance again there. Remember that old resistance becomes new support potentially, not all the time, but potentially. But look here, gang, if I were to just zoom in from here on, in fact, let's take that 1 day sooner than that. If I were to just zoom in right there, and this was the price action that we were seeing of Apple at this current moment, and then all of a sudden, not all of a sudden, but then the next day we get this candle. What happened? Okay, what happened? Well, we have a big break. This is a break, bounces and breaks. Remember that? So we have a big break. Break of what? A break of resistance. So is that bullish or bearish? That's bullish. Now, do we also have a something else going on here? If you take a look right here, I'm just going to draw in a little thin. This is a little small area of support that was showing up, and that little area of support, we now have this break of resistance. We have this little area of support. We're going to call that a hold, okay? A close above the high of the low day. Where was the low day in this pattern? The low day in this pattern was probably this one, but that's very extreme. We're going to get just a little more maybe conservative and take the next lowest day, which would be this one. And I'm just choosing those as a kind of an averaging method for myself here. Which one do I choose? And ultimately, it doesn't matter because it closed above the high of both of those days. This is the one I'm going with. It closed above the high of that day. Is that an entry signal? Yes or no? And the answer is yes, potentially. All other things, that you're checking out meet your criteria, then it is. And so then if we did that, actually this might be interesting too, Ray. I'm going to go ahead and do what you did. And I don't know what this looks like, but there we go. I don't know what this is going to look like because I hadn't done it yet, but let's just do it anyway. So I'm going to right click. I'm going to go ahead and hit activate drawing. I'm just going to go ahead and move that rather than, okay, there we go. Put it right there. And so again, you can see right here would have been our target that Ray just taught us how to apply. And so let's go back to where we were. We're going to be back here again. That's our target. We're not quite sure. We could have potentially entered that on this day, entered that trade on this day. Would have everybody entered that trade on that day? Not necessarily. Sometimes a technician wants confirmation, especially after, not especially after anything. Sometimes a technician just wants confirmation. And so here, if he was fine to get, if a trader was fine to get in here without confirmation, that's great. If they waited for confirmation, it probably would have been on this date, 4/17. Okay, so let's go ahead and just see what happened. And I'm going to move these kind of quickly because, okay, so you can see what happened. We did hit the target. If a trader would have put that in as a conditional order with the target at that price, they probably would have been stopped out or close to it. It would have come close, and there would have been profit to take on that trade. Now, if we weren't in that trade and we're waiting for another opportunity potentially to enter that trade, one more time, gang, this is not a recommendation, but if we were waiting for another opportunity to potentially enter this trade, I'm going to zoom in on what's been happening for the last several days here. I'm going to go ahead and close the left sidebar here so we have just a little more real estate to work with. What's been happening is we've been in an upward trend. We've hit our head on resistance. As we've hit our head on resistance, it's pulled back and created a new level of support. You can see that. Now, that new level of support is running right into that level of resistance. This is called a convergence. When these things converge, we have to expect the stock to move in one direction or the other. So it will either go above the convergence or below the convergence. I'm not sure what that will be, but when it happens, and depending on the type of candle that is, when that does happen, we may have yet another opportunity to enter that trade for Apple. Now, if we were to enter that trade for Apple, one would have many options in terms of a target rate. For example, here's one here I can see about the length of the bar, length of the flagpole, and I go ahead and put that up there and put it on, depending again where it goes. But you can see that that would give us yet another target on Apple if a trader thought that prudent to do that kind of trade based on the bounce or break. And again, if it breaks down to the downside, then we could have a different story and a different experience altogether. Let me go ahead and take a look at, let's look at VLO. VLO. This is a interesting stock. Again, you can see some of the levels of support and resistance. I have a level of support here. I have a level of resistance here. That level of resistance got broke out of, and this is interesting. So take a look right here. We're moving along. Let me again, we're moving along on this particular chart, and as we're moving along, what we're seeing here, let me zoom back out. What we're seeing here is we're seeing a continuation. We're seeing it continue to the top, break through that level of resistance. It moves to the top. We have a hold here. We have a hold. Could you have entered, could a trader have entered that stock on that particular hold right there? The answer is yes. And so on that hold, if a trader got in, great. If not, they may have waited for confirmation. There's your potential confirmation. But as you see, gang, we can see many breaks and many bounces in this particular stretch of time on VLO. What I'm particularly interested in are the last several days. Let me zoom in there. What I see here is a hammer. A hammer where? A hammer at support. The next day, I have an indecision candle. When I have an indecision candle going back to yesterday, that can often sometimes signal a change in power, okay, if you will. Now I have a close above the high of the low day. A trader could have entered at that price. Once I have that close above the high of the low day, if a trader were to enter that price, they could put in a stop loss or another mechanism to protect them to the downside as it comes up and breaks through yet another level of resistance. Might be a good time. Some traders and investors would see that potentially as a good time to move that stop loss up and indeed locking in some of the profits. So important to kind of a concept there to understand as well. Let's take a look at another stock. Let's look at XOM. So far we've seen a couple of breaks. Here's yet another break, and you can see this is pretty cool. Many of you are wondering, okay, so Scott, how do you make those lines for support and resistance that look like that? That's a great question. Let me show you real quick. I'm going to come right here to the drawing tab. Okay. In the drawing tab, I'm going to use the tool that's called a rectangle. Okay. Rectangle. Now I put that up here. If you'll go back, and for those of you who weren't here, go back to night number one's video. We showed how to add this. I'm just going to go ahead and click on rectangle. And when I'm in rectangle, you can see that I can draw my levels of support and resistance with that rectangle. I currently have those shaded gray. I think that we can see them well enough that, but you can shade them any color you want. I like that because this demonstrates even better that support and resistance areas are areas. They're not to the penny points, okay? So I see this area happening here, a lot of great candlestick patterns or signals happening on ExxonMobil. But let's go ahead and just notice one right here. So we're in ExxonMobil. Now, gang, I will tell you this. I understand, the Strait of Hormuz. I understand what's going on geopolitically and et cetera when it comes to oil. I'm not making recommendations here. I'm simply talking about charting patterns and some of the things that we can potentially see. Again, not a recommendation. Okay. So we're here. We notice that we're at this level of support. We have a hammer. What does a hammer at a level of support tell us? That tells us that there's potentially going to be a reversal. Okay. Why does it tell us that? Well, we have a long wick to the downside. When we see long wicks, those are failed moves. That's a failed move by whom? By the bears. Okay, so when we see that failed move by the bears at that level of support, we may be in anticipation of an opportunity for a bounce, to catch a bounce on the way back up, and maybe take some advantage of some profit again on a trade here. So we go back up. Now look, when we get to this level of resistance, I get another, and this is a momentum candle. Okay, a momentum candle. What does that mean? That means it's bigger than most of the other candles on the chart. And when I see that kind of stuff, sometimes that can tell me that there may be some institutional involvement here. Okay, so when I see that break of resistance, I could potentially take this trade. So what I'm going to do, I'm going to go ahead and do that actually. I'm going to zoom out. I'm going to go ahead and just right click. When I right click here, I'm going to hit buy. Now what I'm doing here is I'm looking at buying shares of ExxonMobil based on this hold concept. So I've come here and I'm going to read this out loud. I've got ExxonMobil. I've got these. This is the last price. This is the bid price. This is the ask price. You'll notice that there's some discrepancies between the last and the bid and the ask. We're after hours. We're going to place this trade anyway after hours. So what I'm going to come here do now is I'm going to go ahead and hit edit because there's a few things I wanted to change. I'm going to hit edit. I'm going to change this because I just want to make sure that I get a little better pricing if possible. So I'm going to see if I can get this at the, we're going to go right there. We're just going to go right there at 154.83. That's fine. So I'm going to go read it through. We're going to do that at 89 shares. I don't know why we have 89 shares. I'm just going to make it an even 100. Now, I realize I'm not taking into consideration my portfolio management on this one, but we'll talk about that more tomorrow. Okay, I'm going to make this good till cancel. I don't think so. I'm going to make this a day. Time and forces for the day only. I'm going to hit confirm and send. I'm going to read it again, make sure it's all what I want it to be. And now you can see that I have a limit order waiting right there. Now, if it comes up tomorrow and triggers that, I'm going to get filled. Could it trigger it and pull back down? Absolutely. So we do need to be careful and watch those types of things as well. But there are ways to set this up. And in fact, there's a method called an OCO order. We won't have time to talk about it tonight, but I'm going to encourage you to do a search here in Trader Talks for OCO, where you can look at making orders that will pick those targets up as you go. And this could be an example for one of those potentially. Okay, it could be just the tips. It could be day extended hours, but I don't want to trade at extended hours. And the question was, shouldn't it be day EXT? I don't want to trade that extended hours just during the day, so we'll see how that goes. It kind of does look a little bit like a head and shoulders, or at least like one's developing. Good call, good catch on that. So let me just point that out, Ray. There's a head. We potentially have a shoulder forming here. We'll see how it continues to work. I guess one could look at right there. I guess one could see this potentially as a shoulder, and we definitely have a shoulder here. So, neckline in this area. Whoops. Neckline in this area. So yeah, definitely a potential head and shoulders. Good call. Good catch on that.
Yeah.
Good catch on that. Okay. All right. Let's see how we doing on time. We're good on time. Let me come here. Gang, I hope you feel like this is helpful because I feel like these real live examples are where we really pick it up. We can spend a lot of time on slides and in theory and those types of things, but I think these are when we're in the wild like this, I think this just really can be extremely beneficial. Let's take a look at Coca-Cola. KO. Here we are at Coca-Cola. This is another interesting. Obviously, I'm not going to show you one that's not interesting, so you'll probably hear me say that a lot as we go through tonight. What are we saying here? Again, remember, we're looking for bounces and breaks, and let's look for both, okay? So if we're looking for bounces and breaks, and we can come back to this time frame-ish right here. Let's just come into here. Okay, so we were in an uptrend. We realized that. After the uptrend, we hit a level of what we're going to call resistance. How do I know it's resistance? Well, it didn't go any higher, so it's resistance. And so there's a ceiling there, okay? We've already drawn in a couple of levels of support and resistance here. You can see here I have one. this blue line, you can see that that acted as support, but then old support became new resistance. We actually have a small support line in here as well, but probably going to be less relevant. Okay, so as we see this coming down, now we do have some small candles down in this area. We have a doji in this area. That could be something that could be we could watch for when we had that. We had it close above the high of the low day right here. Somebody could have followed that through when we get to this is important. When we get to the resistance level, we now have what we call a kablode. Okay. Remember how I taught you about kaholds? And we're going to talk more about those too. But this is a kablode. This is a close below the high of the high day, or below the high of the low day. That's correct. And so when we see this high day, how do we know it's a high day? Well, it has a bubble on it. It's not just the high day, it's definitely the high day on the chart for sure. So when we see this close below the low of the high day, then we know that we're looking at a kablode. That video that I mentioned earlier that has Ben talking about Kahold, he's going to talk a little bit about those in that as well. So take advantage of that as well. I'm about to kablode myself. I understand.
I saw that one too.
Hang in there. Hang in there. Again, gang, and this is a good time maybe to just mention this. Um, we're just telling stories. We don't have to be so technical, and you don't have to see it exactly how I see it. And I don't have to see it exactly how Ray sees it. And none of us have to see it exactly how Ben or Barb or anybody else sees it. We'll see it just a little differently. But just remember, it's a story. We're just trying to interpret what's happening between bulls and bears here. Keep that in mind. We're coming along. We're coming right down here, Ray. We have a inverted hammer. Once we get that inverted hammer, then we have a now look, this is an interesting, this is not a Cahold. It looks as though it might be. This is not though, because this is not a close above the high of the low day. Where's the low day? The low day is right here. How do I know that's a low day? Well, look, that was the lowest point in that particular pattern right there. Now, I had a couple of others. I do have an inverted hammer here. An inverted hammer can tell me potentially to look for a redirection of price action. But then I have this bullish engulfing. We did talk about that yesterday. This is a bullish engulfing pattern happening at a level of support, and that can tell us something. There we go. We're starting. Oh, and there. And so I'm just going to go ahead and move it on out. Here we see something happening. We drew in this level of resistance. From this level of resistance, now we're bumping our head, but it's a momentum candle, but we're bumping our head against resistance. Okay, so there's something to maybe keep an eye on, maybe not to worry much about. We'll just kind of keep an eye on it. And then look what happens. All of a sudden, we break resistance. This is a break of resistance. This day opened up here. It opened at 79. It closed at 75 the day before. Resistance is right around 77. So we definitely have a break of resistance. This almost looks like a bullish harami at a level now of support. So we have a break of resistance, potentially a bullish harami at that level of support. Would we wait for confirmation on this day to enter a bullish trade? Potentially we would. Could you enter it now? Yeah, but probably most wouldn't. Most would wait for a confirmation on this one as well. Okay, let's look at, is this helpful, gang? I'm just going to keep going.
Hey Scott, on that Coke trade on that Coke one right there, it'd be interesting to draw a line right there by like 412, where the height of that double bottom drew, and draw the distance from there to down, then duplicate that and put it up there where the test of resistance is.
You know what? That is
Look at that resistance level right there, Dave.
fantastic observation, Ray. Holy cow, look at that. Yeah, I mean that target is right at that level of resistance, just like you said.
Yeah.
I know if we threw a Fibonacci, it would be really, really close to that as well.
Yeah.
We're not, and getting a great job in pointing out those Fibonacci's today, Ray. Go
So,
do search
yeah,
on Fibonacci's as well.
big shout out to Brett Crowler on the chats as well. we had initially we put a link in there that I could open. As I tested it, I can open it. Brett could open it, but we have, I guess, different access. I don't know, but Brett did a great job of finding a new link, and so folks, we dropped that in there for you. So thanks for your patience on that, and great job to Brett.
Yeah, great job, Brett. So this is an important question. The question comes in, what about earnings? Should I even enter a trade during earnings? This is definitely something that you do need to consider. Let me rephrase that. You don't need to do nothing. Okay, this is something that traders and investors try to be wise around, and it can be prudent to take this into consideration. For example, you'll notice that right here, we're looking at Coca-Cola. This was a pop on earnings. How do I know? Look right down here where my pencil's pointing. That was at an earnings call. We saw that earnings call go up. Okay, it did go up, um, but it's held. And where is it held? It has held at that level of what we're calling now support. It was old resistance, but now it's new support. Again, maybe one of the reasons why we would potentially wait for a confirmation on this, what could be a bullish harami at a level of support before entering the trade. But nonetheless, what we're doing is we're giving ourselves some empowerment to take a look around and maybe make better decisions than we've been making on getting in and getting out. Again, getting in and getting out is really the key, and the key to that is bounces and breaks. Okay, let's look at some support breaks. This was an interesting development today. So let me zoom out. I guess I am zoomed out. I'm going to take us out to a 1 year chart on this for just a moment. You'll notice here, I'm going to put these levels, and this is something that we talked about the first night, gang. Old levels of support will becomes often new levels of resistance, and old levels of resistance will become often new levels of support, etc. And so what we're seeing here, this is Royal Caribbean. Royal Caribbean. If you'll remember these guys during COVID, man, they just went crazy, and they've had a good run for a long time. But you're seeing some consolidation, and again, not a recommendation. I'm not saying this is a good stock or a bad stock. We're just looking at the chart. So look what's happening here. We've had some consolidation in this area. I'm going to zoom in. We've had some consolidation in this area on Royal Caribbean. But then look what happened. As we are going along on this level of support, we had a break of support. And this break of support has broke down over the last few days. I mean, and again, this is an area just because these are below the gray, they're still in that level of support. We're just going to call it an area. But look, we've had some indecision type of candles coming down as we have broke that level of support there. We're piercing into a new break, potentially a potential break of support here. Let me zoom back out. And you'll notice that that level is right in line with the level of support here. So if we were to see this stock, RCL, Royal Caribbean, if we were to see this stock go below this level of support over the next day or two or at any point, we could then be looking at potentially a bearish entry. Now we did potentially have that right here because we have a close below the low or the low of the low day, the kablod. It's just easier for me to say the acronym. We had that here, and we had confirmation here. Now, to somebody, and I apologize, I don't remember who said it, but to their point, again, we do have earnings coming up, and that earnings is tomorrow. So, Royal Caribbeans, if you're a trader and investor who's potentially watching this stock, may potentially wait to see what's happening with this stock, see how it reacts tomorrow. If we get a bounce off of that support, that could be an entry. If we get a break from that down below that support, that could be a potentially be a bullish entry, etc. So keep that in mind as well. Let's look at one, not just one more. I've got a few more here. SPOT. This is definitely a break of support. And so we can see support happening at several different areas on this one. I'm just going to be fairly recent. Obviously, this was a level of support and resistance. It resisted, it supported, it resisted, it supported. We have a break in support. Now, that break in support has taken us down to somewhere in this vicinity, right? So now we have that break in support. When we have that break in support, a kablode, we have a kablode here for sure. When we have that kablode, we drop all the way down. Where did we drop down? Well, we dropped down to a level of previous support. Just like we talked about can often happen. Now, what's happening here is if we're moving along on this level of support, we could get a bounce. And so we're going to potentially watch that. Could have one entered a bearish trade on that movement for sure. Could one still do that on that movement? Yeah, for sure. Again, depending on the confirmation that we get moving forward. Why did that gap down? Not 100% sure, but it had something to do with this earnings call. So there's your earnings call. It happened on the day that it came down, which was yesterday. And now the investors and traders are trying to digest the information from the earnings call and make some decisions about what this stock is really worth. So let's look, Ray, you maybe if you want to help me just kind of look at this one. This is Costco. This is the one that you talked about. So give me some commentary, Ray, here. We have a definitely, you can see my support line of 975-ish in that neighborhood. I've got a hammer. I've got a big green momentum candle that's actually acting right here as a bullish engulfing and a bunch of other things. So Ray, kind of talk me through this. What are you seeing?
Yeah, zoom that back out to a little bigger so I can see the whole thing. And then I'm gonna look at the same one
This is
on.
6 months. You want 1 year?
So I was looking at a year when we looked at the first one.
There you go.
Yeah. And CS not look at CSCO, not Costco.
Oh,
CSCO.
the shipping
There you
company.
go. There you
Yeah. Okay.
go. All right.
Okay. All
And
right.
so the thing we looked at is it came across um, it came down, hit a triple bottom.
Okay.
Uh, and so then it bounced up through resistance right around the 82 mark.
Yep.
And then we looked at, okay, it's kind of forming that flag right there. All right. You can see the flag kind of started right about the 14th of April. Yeah, there you go. And so that's what we were kind of looking at is the flag coming in, the flag coming back down right through there. And then today, if you look at today's uh, candle, that momentum candle, that green momentum candle right there, it broke up through the resistance of the flag.
Okay, hang
So,
on. Hang on. Hang on. Let me just point out a couple of things. I know where you're going and I want to continue, but I want to point out a couple of things. Look what's happening. So look what's happening here. What is this? This is an old level of resistance acting now as a new level of support, correct?
yep.
And so what's happening down here? Down here, we have again that same kind of deal. Old support, new resistance, old support, etc. Okay, continue, Ray.
Yep. And so now you got that breakout. This is you're talking about that break of resistance
Yep.
in the flag pattern. So if you want to, draw that pole either to the bottom of the flag or the top of the flag, depends on if you know how, not duplicate it. Yeah. And if you want to, depending on how you are, I typically go down to the bottom. Doesn't matter what I do. It's a way of doing it. But if you also, Scott, if you want to get Fibonacci retracements going and then draw from the top of that
Zoom
that
out just a little.
pole.
Okay.
Yep. And then down to a little higher up from that. That's a little too low. That where the starts, a little higher up. And it didn't matter. Right there's good. That's good. All right. And then you can see that right now, you know, the target you drew with the flagpole and the target the Fibonacci is bringing up is showing the same thing.
Yeah. Yeah.
Hit the minus magnifying glass.
Yeah. There we go.
There you
I
go.
want to zoom in on you.
All
There
right.
you go. Okay.
There
There
you
you
go.
go.
And
Yeah.
so you get the same activity, which is very, very useful, very helpful, in using those targets. Now, tomorrow we're going to get into more of the orders and the OCO orders, and maybe we'll bring this one back up. I'll write it down, and maybe we can use this as one of the examples for our OCO order for tomorrow's class.
Okay. That'd be awesome. Very good. Okay, and then I just have one more, and I just this is unity. This is you. We have a bounce off of support. I mean resistance here. We're coming down. We talked about this the other day, and that's why I brought this up. So what we've seen is we broke through a level of resistance. It's now acted as a level of support. We're bouncing against a level of resistance. We have a shooting star there. Shooting star typically tells us that we should watch for a pullback. I can get rid of this line probably right here. And so it typically can signal a pullback. We do have another candle right here that at a level of resistance is what we call a hanging man. And a hanging man is definitely a bearish type of candle. So you can see that that's all right there at that level of resistance as well. So potentially, we have a potentially we will be watching for a kablot here. We may get into a bearish trade, or we could watch and see if it's going to come down and bounce off of this level of support again, depending on our posture, depending on the things that we want to accomplish through it, and various things like that. So Ray, holy cow! I mean, that's we got through a lot, I think, but there's just so much to cover when we're
Yeah.
talking about candlesticks. Gang, don't let me saying that overwhelm you, though. We have so many wonderful resources. Again, Trader Talks. Brett just dropped in, or somebody just dropped in something about the Trader Talks and how important they are, etc. So please take advantage of that. While you're here in the YouTube channel, do us a favor, go ahead and hit subscribe. Also, go ahead and hit like. Don't forget that we do have a survey that we really do appreciate you filling that out. That's really our only ask of you.
And move your slide up, Scott. It'll be on the
Yeah,
QR
I
code.
got
Will be
you.
in
I
there.
just wanted to recap the goals before we did,
Oh,
and
okay.
about that. So tonight, what we've done so far, as you're filling out the survey, remember this, and hopefully there's been a few aha moments. We'd encourage you to put those in the survey. But learning to analyze the potential price movement of a stock with target forecasting. That seemed to be an aha for some. I know when I first saw it, it was an aha for me. It's a valuable tool a lot of traders and investors love to use. Learn to identify price patterns and how they're used. Ray did a phenomenal job on that. Again, there are so many things that we need to just remember that it's just a story. Learn how to identify potential bounces and breakouts. Learn how to identify potential entry and exit conditions based on those bounces and breakouts. Tomorrow night, we will be talking about entries and exits and risk management. There's the survey again. Please go ahead and click on that now, or use the QR code and fill that out for us, please. Remember that I'll put it back up here in just a second, but remember that everything that we've done here tonight has been for educational purposes only. Ray, thanks so much for your participation tonight. You've done a phenomenal job, like you always do. Appreciate you very
Right
much.
back at you, my friend. Right back at you.
Okay, gang. Hey, listen, same bat time, same bat channel tomorrow night. Please fill out the survey. We'll see you all tomorrow night. Thanks for being with us, everybody.